Thanks once again for joining us. This is Greg. Today we do a follow-on to sort of the Warren Buffett discussion we had and its relationship to Tesla's shares and where we might be headed. So just a reminder, this is Greg for Teslafaninsight. Thanks for joining us. This is your first time, welcome. If you're a repeat visitor, welcome back. We also want to thank our Patreon supporters. If you enjoy this show, would like better ideas on investing and trading, please join us on Patreon. So obviously we're in a very unusual circumstance right now with the potential impact of tariffs and other variables on what's going on. One of the things that I've been fascinated by is that I often bring up a discussion of the fact that there were 6 blind men, each of them holding a different part of an elephant in India. And each of them had a perfect description of what the elephant looked like, except for they were all holding different parts. And so I wanted to move into this realm because it gives an opportunity to sort of forecast where we're at and where we're headed. So the first part of this show, I'm going to be working our way through sort of segments of the market and how they're impacted by the current circumstance in order to start developing a picture of what we're experiencing right now and might experience in the near future. So part one of our discussion is simply the fact that I've been somewhat obsessed with what's going on with oil prices of late. The primary reason, as you know, is that oil prices represent 2% of the costs of every company. So if you look around you, in fact, if you look behind me, the ceiling tiles, the roofing, side, everything, all those companies are using oil in some ways to deliver their product or make their product. And so as a result, it's a critical issue for the economy. When it comes to the market, 25% of the Dow is oil, either oil or oil services. I'm in rural Long Island and therefore we have trains going by, so I apologize if it's a little bit loud, I will speak up. So I wanted to bring this up today because my initial discussion of Warren Buffett talked about the fact that Warren had elected to put $300 billion plus in cash on his balance sheet and pretty much get out of the market. He had also sold out of the S&P and other funds that were index funds that he had at Vanguard. So one of the arguments that I made is that you never can go wrong following the logic stream of Warren Buffett, because obviously he's made a ton of money over time and will continue to do so because he has a rule. Most people are trying to get rich very quickly. He's trying to get rich very slowly and has done that for a long time. So what I was fascinated by is how, if you look at the market, there are these different market segments that are behaving in different ways. And frankly, that includes Tesla. So the example I want to bring up here is if you look at the oil and oil services segment, we have kind of slight insanity going on. As oil prices are falling, once they get below $60 a barrel, right now they're in the 67-ish range. They've come down from about 75 to here in the last month. As the amount of oil is being pumped increases, there's more supply and therefore price starts to decline. Now, why is this a big deal? Well, the answer is that we start arriving, as you can hear, we have the olden days trains here. I'm in a place called Roslyn, New York. So what's actually happening then is we're seeing increased production of oil. That increased production is resulting in falling oil prices. OPEC only added 130,000 barrels as a plan coming up, but what the market is saying that that 130,000 extra barrels could turn into 500 or a million. It's unknown, and so therefore we have to assume that prices are going to keep falling. Now, what's interesting here is that as oil prices fall, inflation is actually falling, but at the same time, the investments that would be going into increased oil production are being reduced. I was told as of a year and a half ago that $50 was a break-even point for new, if you will, digging when it came to oil in the Permian Basin or in much of the United States. But I recently was updated to the fact that that number might be something like $60 a barrel. So what would happen then is that people who already drilled wells, they have the sunk cost there and they're just, digging for more oil in an already spot that they've already built out. The issue is, do you have new wells being drilled, because they tend to be at the higher end of the price curve and therefore can't get to break even if prices continue to fall. So one of the things that makes sense from Mr. Buffett's standpoint is, if Mr. Trump is unpredictable and he brings in a lot of negativity to the market based on that unpredictability, it leads to, if you will, a lower overall stock market that we've seen. And it was well anticipated by Mr. Buffett and all the people that were anticipated unknown craziness at this point. So you could say they're right. One of the challenges with analysis these days is how there'll be different pools of capital behaving differently. So for example, I recently learned that for every million electric bikes that are on the road, for all the electric bikes that are on the road, the equivalent is reducing daily oil consumption by a million barrels, because what people are doing is replacing trips that they might be doing in a car on an e-bike, and therefore you're consuming less fuel. A counter to that might be the expansion of things like X's AI initiative, and the fact that they're using huge amounts of oil to generate electricity to power both, the coolers for those computers and the computers themselves for the AI initiatives. And so, yes, there's this thing called AI, which is a part of the marketplace that's generated a huge amount of cash. Take a look at NVIDIA's stock price, how well it's done over the last year and a half. But still, the whole AI stuff doesn't equal 25% of the market like oil does. So when we get back to our analogy of different elements having their arms around different parts, we all of a sudden end up in a realm where, wait a second, the markets might crash right now for good reason. All the tariffs that are coming in, the inflation they represent. I saw this one piece where there's a Dodge that's built in Canada and it's 80 grand, but after the new tariffs, it's actually up to 100 grand. So that'll definitely reduce the number of folks that are choosing to purchase that vehicle and others of its ilk. So what this then means is that it's not across the board that the market is dropping. There are sectors like oil where as prices drop, we'll expect to see the integrated oils have lower prices because they don't earn as much on each barrel that they bring up. On the flip side, the AI initiatives are still moving along nicely, and it's not as big a piece of the market, but it's drawn still a lot of investment. When we look at what's going on with Tesla right now, one of the big question marks that's lurking out there is, at what point is Elon going to stop production in high volume of the Cybertruck and other vehicles that are backlogged, and instead swap out those facilities perhaps for a few weeks or a month at a time into producing the Semi? He can definitely wait until next year for this to be produced, but you could actually use most of the facilities either in Texas or in the Bay Area to actually produce the Semi now, because there's a 3 to 5 year backlog for that vehicle. And when you marry the fact that the semi is not replicated easily by any other entities in Europe or China, you now have the potential that there are a large number of buyers that will go ahead and buy the semi and implement them to address pollution issues that they're having in Germany. In particular, a number I read that blew my mind was that in Stuttgart, Germany, there are 18,000 people a year that are dying because of the amount of pollution generated by the trucks and cars in that area. So if you have people making the choice between Elon and some of the things he stated and having a vehicle that could potentially significantly cut the truck pollution in that area, I think people may grin and bear it and choose to go ahead and purchase versus back off their purchases because they have good alternatives to working with Tesla. So I'm hopeful that we possibly see this happening, because if this does happen, it's one of the ways that Tesla could actually see a nice boost in its stock price, etc., and do very well despite some of the headwinds that they've had recently. So overall in this discussion, what I wanted to introduce is the fact that in order to see the future, you really have to start to take apart how we're doing as an economy, as a market, and then look at those individual large slices to determine, well, where are we now and where are we headed? And you could definitely argue that oil prices are headed lower, and therefore we're going to see lower numbers for oil and oil-related services. Obviously, AI is doing well. Maybe it's 10 or 12% of the market. It counters some of the weight of that. We also have potentially other industries. I mean, there's a shortage of housing, so we're seeing some building that's going on. There are other things that are going on, but it's not uniform. The one other thing I wanted to introduce here is the fact that what if you're so powerful that what you do helps to shape the market? So for example, Mr. Buffett, it was publicly known how much he pulled out of the markets. There are other entities that followed him. One of the things I've noticed over the last 2 or 3 crashes is you tended to have a market that was charging very fast and very high. And then one of the things that's happened in the past is they ran out of cash that could be brought into a market that was doing better. So I kind of bring this up as another element of what if Mr. Buffett and those that are pulled to the side with their cash represent one of the reasons that the market is falling, which is literally they're sort of out of the market. Now, I also would say that, yes, being out of the market leaves spare cash, but there's also one last question mark that I see out there, which is every month there are large pension funds that have large amounts of capital that come in and has to be invested. If in fact those funds require the money to be invested and not sit in cash, all that money coming in could end up back into the market. And then finally, we've often discussed the fact that as private equity has taken out 25% of the companies in the S&P over time, the number of companies that are available for money to be put into means that the PE ratios of the companies that are remaining, including Tesla, might be higher. The one other thing that I would like to invite you to do in order to have a better picture of where Tesla is and where we're going is to take a look, if you would, to Google. I'm going to post this in, but Google the largest shareholders of Tesla stock. What you'll find is Elon is at 12.8%, and most of the other largest holders, including Vanguard, are all indices. And so typically what I found is the indices tend to vote with management, whatever it's doing. So I would say that we could probably expect Elon to have his vision maintained and control maintained, simply because as part of so many indices, there's no way to get together those investors to oppose how the board is handling the company or handling Elon as we go forward. So therefore we can expect, I think, a continued what we're doing with Tesla and Elon going forward, and hopefully we get a shift in what he's doing, because He argued that 10% of sales had been lost based on his behavior previously, but that number I think could be a lot higher right now based on a lot of things we're seeing. And then obviously we're 2 weeks away from the number of vehicles sold during this period, and I think that number will definitely affect the stock significantly in the process. Final note on Tesla is I did see something from Wells Fargo today that suggested that they're suggesting we're 40% above where the stock price is going to be once people have all the data to work with going forward on Tesla. I hope that's not the case, but I want to encourage you to stay hedged because we've had a pop back up to around 250 for Tesla shares. But there's a lot of heavy news that's coming in that will affect the stock greatly. Once again, this is the finish, and I'd like to go to our health tips. I just did the 20-minute walk this morning and the 25 leg lifts. Also a reminder, prior to lovemaking, please make a point of trying to do a salad or something in that realm as a way to reduce the blood flow to your stomach, and it will now enter other extremities. Once again, thanks for joining us. This is Greg for Teslafaninsight. Just a while Heath Road, in Jamaica, we say enough respect, walk good man. Thanks for joining us. Have a great day, and bye for now.